Now we are going to look at the work together for 2-2 in our textbook on page 37. In this particular problem, we are going to analyze transactions into their debit and credit parts. As you can see here, we have several different transactions that take place for our company, Bergam Services, for the month of April. We're going to go through each one of these transactions and break them down into their debit and credit parts using our T accounts and our work together working papers. We're going to use the rules that we've discussed and the questions that we need to ask for each type of transaction. So, our first transaction on April 1st. Oh, let me just back up 1 second. We want to also remember that the transactions will all refer to the account titles that are referenced here in this little mini chart of accounts for Bergam Services Company. So, our first transaction on April 1st. We received cash from the owner as an investment. So, what are my accounts that are affected? My accounts that are affected are cash from the owner and the capital account. So I'm going to put, always I put the account that I believe is going to be debited first. So I'm going to put cash. And the second account is going to be Kathy Bergam Capital. So what type of account is my cash account? My cash account is an asset, and my Kathy Bergam account is an owner's equity account. How is each account changed by this transaction? So in this particular case, we know that cash is going to go up, and we also know that Kathy Bergam's capital account is going to go up. So therefore, if our cash account is going to increase, we're going to debit our cash account for the amount of the investment. So we're going to debit it for $5,000. And we know if the capital account is going up, we're also going to credit that account for $5,000. And that makes sense because we're going to have one debit and one credit. Let's move on to the next transaction. On April 2nd, we paid cash for supplies. What are my two accounts that are affected? I've got my supplies account, which is affected, and my cash account, which is affected. What types of accounts are these? These are both asset accounts. So therefore, immediately, I must be thinking that one account is going to be increased and one account is going to be decreased because they're on the same side of the accounting equation. So therefore, if my supplies account is going to be increased because we're buying supplies, then I'm going to debit my supplies account for the amount of the purchase. So I'm going to debit it for $50. If my cash account is going to decrease, my cash account is an asset and assets decrease on the credit side. So I'm going to credit my cash account for $50. Next transaction on April 5th. On April 5th, we paid cash for insurance, $75. What are my two accounts that are affected? My prepaid insurance account, and again, my cash account. How is each type of how is each type of account classified? Both of these are assets. So if they're both on the same side of the accounting equation, I know that one account is going to be increasing and one account is going to be decreasing. So therefore, if my prepaid insurance account is going up, I'm going to debit it for the $75. If my cash is going down, I'm going to be crediting it because assets decrease on the credit side for $75. My next transaction. Bought supplies on account from Bales Supplies, $100. What are the two accounts that are affected? my supplies, and then accounts payable, bail, supplies. How is each account classified? My supplies is an asset, and my accounts payable is a liability. What's happening to my supplies account? My supplies account is going to be increasing by the by the $100, and my accounts payable, bail, supplies is going to be increasing by $100, so it will be credited. So our last transaction here is on April 9th, we paid cash on account to bail supply, $50. So what are the two accounts that are affected? We've got accounts payable, bail, supply. We always put the debit first. And then we're going to have our cash account is affected. How are these accounts classified? Accounts payable, bail, supply is a liability, and cash is an asset. What is happening to our accounts payable, bail, supply? We know that our accounts payable, bail, supply is decreasing, and we know that our cash is decreasing. If we follow our rules of debits and credits, we must have one debit and we must have one credit, and this makes sense because if both of these accounts are decreasing, we're going to then decrease our liabilities on the debit side, and we're going to decrease our cash on the credit side. And that concludes our problem, our work together problem on page 37 for 2-2. When you are working on your application problems for 2-1, and your application problem for 2-1, all this is simply looking for you to do is enter the type of account, how it's classified, whether it's asset, liability, or owner's equity, what the normal side balance is for that type of account, what side the account increases on, and what side it decreases on. In application problem 2-2, you will do a problem that is very similar to this work together problem that we have here on page 37. You will always remember to put the account that you think will debit first, you will put that transaction or that T account first. If you have any questions, please email me at mcgrathj@goldenschools.net.
She said we needed